So in this module, I will be covering another example of the entry helper in use, essentially covering the LETs, again looking at the whole day's worth of price action and how you kind of identify the LETs in combination with everything else, because that's the most important part, is putting the LETs in the right places and not just making up things. So in my previous module, you probably did see how the let essentially was an inducement rather than a mitigation. Now, that is, of course, not very, very common, but that can potentially help us identify when an inducement may be towards its end. So we're not guessing, but we can potentially expect that. And that is more inducement trading, as I mentioned. So wouldn't say go into detail on that one just yet, but maybe identify it for your eyes, train them. So that being said, currently in the screen in front of us, we can see, of course, the beautiful Asia session, our midline, which is the 50% of Asia, essentially. Funnily enough, it's kind of equal highs in that zone on average, around that area. When it comes to liquidity, again, same thing with the lows right here. These are perfect equal lows, equal highs. These are amazing. So with that being said, what happens is price does essentially vector out of Asia low. You can see the vector candles, they're pretty nice. However, right after that, we get this choppy price action. So you can see this type of channel-like liquidity. It's not necessarily equal lows or equal highs, kind of on the trend line aspect, but more so a channel. So with that being said, we can already see that the likelihood of this sustaining when it comes to buys is probably very low. So likelihood is all the buyers here will get induced. Now you can already see what happened, I know, but of course, understand it though. That's the most important part of why this would fail, essentially. So this is where we get number 2, which is inducement, and then the ones being the build-up. However, we're not finished, and that's where we get the fractal stages. We have the 1 again on both sides. 2 occurs right here. Now, with this 2, what's nice is, what is nice? Well, it's a nice wick. That's the only thing that's nice. However, the only thing when it comes to something like this, where you get this really sharp wick, it could likely be news-based. Now, you have been taught the spoofing candles or the ghost wicks or whatever you want to call it when it comes to brokers and news events. This isn't too crazy. As you can see, it's not that crazy of a wick, but it likely shows something on news probably went on there at exactly 8 o'clock here. So I'm not so keen on that when it comes to it being the clear inducement, as well as if you see, there's not a mitigation anyways. It didn't provide any sort of mitigation at this point. So at this point, you simply watch it. Maybe if it does react like such, you take a mitigation possibly here, as this whole zone showed nothing, which is basically this zone. Didn't show anything. But that's, of course, a waiting game, and that's why this entire thing does not count, and you can already identify it's not a means for entry anyways. So we're going to wait for a more clearer inducement, again, ideally with confluences. So currently what we can see right here is these equal lows as well as equal highs. Again, our random wick over here, and also an inducement of that wick. So for me, when I see this, I see essentially, okay, now price has made the real inducement, as this was kind of like a ghost wick. Not actually, I would not say ghost wick, but more so not very reliable when it comes to the intention side, but probably a broker-based thing. So that could likely be an inducement. And what also helps, it's also Frankfurt Open. So you can see it's 8:23, so 23 minutes in. And again, timing based. So we have our build up to both sides. Again, everything here was a build up also. Again, with the lows, so we get several build-ups upon build-ups upon build-ups, and then these minor inducements like such here, and then this potentially being our last one. Now, we're not interested in taking that. Again, we want more confluences, so ideally we want to wait for a mitigation to appear. So what can we see? Firstly, with this reaction of the inducement. So what can you see additionally in this inducement? Now, it was mentioned in the previous video of the entry helper. So I'll give you 1, 2, 3, 4, and 5. It is, of course, a let. So our inducement could also be a let. Well, it is a let, but what I'm trying to say is our inducement is a let as well. So it's let confirmed. Now it doesn't look so clear, and now this is where it gets interesting, where you probably like, well, actually, we have a let there and a let there. Now look at what those points signal. Equal lows. We're not even interested in anything in that until we get our inducement off that point there. So that's what makes this let a reliable one, because it actually does induce. So this is why you use the lets with reliability and don't make up things. That's really important, right? So let's now progress forwards. So what do we have now? Essentially equal highs. So we've had our inducement low also being a let, so that's lovely. We also have equal highs. What is that? Triple tops, not a quadruple top just yet. But we're getting this rejection, so we have a target to the high side, meaning, of course, at minimum, we can expect price to at least tap above here. At the same time, if you remember, we have our highs over here as well. So what do we also have missing? Well, not missing, but pretty obvious looking POI. It's got a nice, crazy looking imbalance right there. And we've got a nice clean POI after our let type of inducement. It's horrible, horrible arrow that is. Okay. That being said, what can you also see on the entry helper at this point? So we have our POI. It's also potentially another let. You can see price has already crossed over this line like such. So price can likely now tap back into it and form a let. So it lines up perfectly. Now that's the key thing when it comes to the lets is look how it basically looks exact. This whole picture here basically looks the same over here in that sense, that we can likely expect that as price trends downwards, it taps actually into that. So that's a nice POI, again confirmed by potentially being a let. Nevertheless, is it valid on its own? Of course. Why is that? Because remember, we had our build-up, 1, inducement, 2, and then the last stage would, of course, be the mitigation. So let's see how that plays. Perfect. As you can see, a really beautiful reaction. And it was indeed a let. So that's lovely. At the same time, this is where it's important to understand that all of this occurred in Frankfurt, not necessarily London Open. And that's why in London Open, you don't get very much nice price action here. As you can see, that's 0 entries. There's not a single entry. But take that entry. That's the clearest it could get at that point. So in this case, makes sense for London to be, of course, the continuation aspect. So I hope that all made sense. That's pretty simple, pretty clear. But you're probably like, let's do it again. Come on. I know you want to do it again. So of course it's important because we want to build this in your head again and again and again. So next example, we have, of course, GJ. Now in this example, again, let's identify what liquidity targets do we have if we want to sell. So that means we ideally want to find early sellers, essentially. Now, already with this price action that has already played out, so in front of our eyes, what can we already identify? Well, we can already see a smart money trap that induced smart money traders. So that being your trap, right? Of course, there is a reaction until here. And only from there, we get, you could say your trendline trader is getting happy with their quadruple touch over here. 4 touches, right? Lovely for them. They get excited. And then your smart money traders are now out from this vector candle, right? So now that vector candle has occurred, what can we expect? Well, firstly, you can already see we have equal highs over here. So our inducement clearly is not complete in this stage. So now we just simply have to wait for an inducement. Now, based on timings that you can see below, you can see no Asia box. Now you're probably thinking, what happened over there? Well, I'm actually using the 1-minute chart, hence why you don't see Asia range, because now we're almost approaching New York. You can already see that was London based on the gray box. So in this case, it's a New York potential trade. So let's see what happens. What do we need though, essentially at this point? We need an inducement high, right? Because we have liquidity still remaining. Got this nice trend line that's technically induced at this point, but we still want an inducement high because there's not a clear inducement right now. We haven't got the vector candles or a clear pinpoint reaction to then enter off. So what do? We get an inducement, right? So we get an inducement right here. Are the equal highs taken out? Yes, they're gone. Can we potentially take sells now? Of course. What is approaching at this point? Come on, use your eyes. Use your eyes. Look at this. It's almost at New York Open. How far off are we at this point? Only 1 minute, quite literally 1 minute off. So what happens? New York Open, of course, then gives us reversal, right? Because technically London over here was the continuation. New York was the reversal. Everything in between from MM1 over here, which gave us that little pullback, was of course essentially a build-up. You can clearly see this everywhere. Get an inducement. Is it complete? No, not really. What do we wait for? A clear inducement. Again, we're building a trend line at this point. So at this point, we have a very clear target to at least take out the lows over here. Pretty nice risk to reward if you look at it like that. So now we've had our reaction, we actually do have the relevant breaks of structure over here. You can see that's relevant. Why is that? That was the last push that led to the inducement. Now price has reacted. It made this break of structure essentially. Again, it's relevant break of structure. We don't really use it otherwise. So if it makes sense like this, then why not? Again, we recommend you do use it again because it probably increases the chances of you getting into an entry. That is confirmed, of course. So with that being said, we have a POI and a smart money trap. Why is that a smart money trap? So remember your understanding of the smart money trap. It occurs, of course, in the sense we've had an inducement high. So now we've had our inducement high. We're trading away from anyone that's buying now. So your trend traders are still probably in their trades, expecting it to still continue. Smart money traders take this as a POI, thinking, okay, we can continue, right? It's the last, you could say, imbalance at this point. It led to this break of structure, this reaction over here. So now we take the POI over here. Now you can see with that understanding, it really messes you up. And this is why the break of structure thing is, yeah, not very reliable. We wait for the inducement first, and then only if a break of structure appears when it's relevant do we then consider that. Now that's key. Keep that in your head, of course. Now POI, of course, you're taking this cell, not this one. So price may react. At this point, it's right there. So it probably breaks through and maybe becomes an FFS. But POI, we have a nice extreme POI up top. What do we also have? Well, we have a New York Open mitigation point because potentially we may mitigate in New York. If not, outside of New York, say here, it still becomes the New York mitigation because the mitigation appeared in New York essentially. So now what we can see is another potential leg. Why is that? So we see, of course, price crossing the liquid equilibrium line, which is this black line over here, or gray line. The purple line crosses. So what that means is upon the potential pullback we get like such into the POI, we may get somewhat of the same touching liquid equilibrium line, which is, of course, then going to be looking like something like that, hopefully. So again, yeah, really nice entries when it comes to that. The potential, again, adding the let, it makes everything so much more clearer and easier. Again, more confirmed as well. So what happens? We get the perfect 1M let, as you can see. Perfect reaction. I mean, it's not the perfect let, I'll be honest. Nevertheless, POI still remained a POI. Get a perfect looking reaction right there. Now it's just a matter of waiting. And we wait, and just like that, price, of course, takes out everyone. You can see the whole trend line is induced. Not a speckle to wait for there. We get even build up rejection here. Why do we potentially get rejection here? Well, we get a lot of liquidity there. So if I can draw my line straight, that will be where your essentially support buyers would buy, because whatever, we get this first reaction, then upon this reaction they buy. So it's important not to get confused in a mess like this and only assume it's a build-up. Ideally take the prime entries, which always appear, and that would be, of course, the mitigation in New York Open. Upon that, there's not really any other entries, as you can see. There really isn't anything else, so we're not going to make up things, but you have the clearest entry to take and look at the risk to reward potential. And of course, you get cheap. Everything's cheap. All of the buyers, even your lows over here. trend line, everything. So what does that mean? Trend traders are, of course, now induced, as well as your smart money traders, lows, resistance, support, sorry, then whatever you want to call this stuff. Everything's liquidity. You can call it whatever you want. Your lows, your trend lines, or channels, essentially, is probably the better term. But yeah, with that being said, I hope the let part makes sense. Just showing you another example of, again, this time it's New York before it was London Open. Sometimes it's magic manipulation minutes. Now, in this case, that would be really nice if it was magic manipulation minutes. However, upon this reaction, if price then induced high, that would be perfect to then take out at minimum this liquidity. So that's why we know this zone is completely invalid, because price has already induced this zone from this reaction before it came here. So that's where the momentum mitigation comes into place. So if you're struggling a bit with the smart money trap identification, or FFS, I would highly recommend pairing it with the momentum mitigation and understanding essentially when a POI is valid or not. Essentially, they both go really hand in hand. Like, well, I hope you also enjoyed that.